it has originated from the word banco. Okay, in Italian it is banco, in Latin it is bancus, in French it is banco, and all these carries a meaning that a bench. Okay, the meaning is a bench. Now I'll tell you the history behind this. There is also another version which said it is originated from the German word bank, which means heap of money or pile of money. So these are the two accepted notions or accepted definitions about the origin of word bank. So to conclude, we will say that the word bank has derived from banco, bancus, or banku, okay, which means bench. Now I'll tell you the scenario of why it is referred in this way. See, previously the merchants or people who used to do business, okay, they used to, in a marketplace, in a so-called marketplace, they used to sit on a bench and do their business. And once they lost their business, they used to break this bench to show that yes, they lost all the money, they lost the business, the day they have incurred huge loss and all. So always there was a referral point to the physical item called bench. This is the logic of referring the word bank to banco or bancus or banku in different languages. That's why there is a reference which is made to bench. They used to sit on a bench and do their business, and the bench was used as an indicator of success or failure. So that is one reference from where the origin of word bank. The second one, which is much more popular, says that it is derived from the word bank, German word bank, which means pile of money, because banking is all about dealing with money, financial transactions. So these two are some common belief about the origin of word bank. Now going further, the ancestors of modern banks, mainly three different categories of people are referred to as the ancestors of banker, the modern banker. Okay, first one is the merchant. See, normally the merchants in good old days, they used to accept money. They were engaged in trading activity. So for meeting the financial requirements, they used to accept deposits from different people, and in return, while returning the money, they used to give something in return as for the purpose of lending to them. So they had the habit of accepting money, and they used to issue title documents that they owe so and so much of money to that particular person. So likewise, they used to issue title documents. So this automatically is a referral point of accepting deposits by banks. Banks do that, right? They primarily accept deposit, and when they accept deposit, they give receipt of receipt stating that this much of money is held in the bank with an interest rate of. I hope you have seen the fixed deposit receipt. That's a good example. That's the same case with recurring deposit. They give a receipt that is to be kept as a proof. It carries a number, account number. Right. So that is the concept which is reflected when we say merchant banker as a forerunner of the modern bank. They used to carry out business for meeting their financial requirement. These merchants used to accept deposits and acknowledge the receipt of deposit by giving a document, a title document. So they are regarded as one forerunner of the modern banker. Second one, as we know, even now in rural parts, many of the rural areas of India, we can see these money lenders who are much popular than the banking system, or maybe than the banks. Their penetration level is much stronger than the ability of the bank to reach to the public in some remote rural places, even in today's perspective. We can say that. So the primary task of money lenders, they are people who deal with money, they start lending their excess money for an interest rate, high interest rate. That's the basic nature of money lender. So that's their business. They lend their excess money, the money which they do not have they do not need it temporarily. They start lending it. They used to lend it at a high interest rate. So these people are also regarded as, that's a second function, lending money. So these people are also regarded as forerunner of the modern bankers. And the last person which we used to, or we say is Goldsmith. Goldsmith, their primary nature is they deal with valuable stones or jewelry, maybe which is made from gold and silver. So since they deal with that, since they deal with these precious stones, people have the habit of entrusting them with their precious stones or valuable jewelry for safe custody. These goldsmiths used to accept it from the people and they acknowledge that they have received so much. Maybe they, in some cases, they used to charge a small interest or charge a small fee for this service in the olden days. So they used to accept the precious, maybe jewelry or precious stones or valuable assets, which is in the form of gold or silver from people. And this resemblance, the safe custody or the local facility that is given by banks. Today, almost all the large banks offer this facility for the customers for keeping their documents or their valuable assets in the safe custody of banks. So that is why goldsmiths are also regarded as one of the forerunners of modern banker. So these people, because of the nature of the business they do, they are considered to be the forerunners of the present day bankers. Right, so the merchant, because they used to accept deposits for doing their business. The money lenders, they used to lend their excess money, and the goldsmith, they used to offer the facility of safe custody of valuables or maybe jewelry or precious stones of the people in that period. Now they don't do it. There is no need of it. Actually, there is no need of it. So they are also regarded as one of the forerunner of modern bankers. Now, the next thing which we are going to discuss is when we look from the perspective of Indian banking sector, the era, the developments in the banking sector can be categorized into three periods. Okay, three phases. One, pre-independence period, when we had the British rule, colonial customs rules, that is before the independence. So that era is called as pre-independence period. The second phase is from when we got the independence till 1991. I'll tell you why it is important. That is from 1947 to 1991. Of course, there were many changes that were happening during this period, but that phase is what we call as the second phase in the banking sector. And the third phase is from 1991 onwards. 1991 onwards, Indian economy was open. We have learned the concept of globalization, liberalization. All these happened from 1991 onwards. Many of the foreign banks started coming to India. They have their operations in India. They have their branches in India. So all these started after 1991 when the economy was open to foreign players. That's why we say that the banking as such, the development of banking in India can be categorized into three phases. The first one is pre-independence. Second one is from independence to 1991. And third phase is from 1991 onwards, where the economy was opened. Now we talk about the global market instead of sticking to our Indian or national market. So that scenario started mainly from 1991. So that's the three phases which in which we would be discussing about banks in India. Right. Now, the next thing what we would be going to discuss is origin of banks. Origin of banks, as Millen said, initially when we trace back, there were small organizations, institutions, maybe private agencies who were doing the business, but we stick on to the major ones which could be plotted as the developments in the Indian banking sector. So as such, in 1770, we can find out the establishment of Bank of Hindustan, which is recognized as the first bank to be established in India. Okay. Before that and after that, there were many small institutions, but meeting all the requirements of a bank, we consider Bank of Hindustan to be the first bank of India. Then in 1786, the General Bank of India was set up. These are the major, okay, after this you have to go with the referencing of trying to understand the major and minor developments in the banking sector. Then we have the Presidency Banks, which is Bank of Bengal, Bank of Mumbai. No, now it is Mumbai, so it was previously Bombay, Bank of Bombay and Bank of Madras. And that was Bank of Bengal was set up in 1806. Then Bank of Bombay in 1840, and the last Bank of Madras was in 1843. So these three banks were in fact having the major part of banking business in India. So they were called as the Presidency Banks also. Now these were merged, okay, to form the Imperial Bank of India in 1921, later renamed Imperial Bank of India, later renamed as State Bank of India in 1955. Right? So they were merged, all the Presidency Banks, they were merged to form the Imperial Bank of India, and which was again renamed as State Bank of India from 1995 and 1955 onwards. And of course, through the RBI Act 1934, our Central Bank, Reserve Bank of India, was set up in 1935. RBI Act 1934, and by passing that act, Reserve Bank of India was set up in 1935 as a central bank controlling the banking operations in India. Okay. Now, of course, we talk about nationalization of banks, 1948 onwards. Now, when we talk about nationalization, we talk about bringing directly under the control of government. Majority of the ownership, the stake is with the government. That is 51%, or starting from that, it would be with the government. So from 1948 onwards, nationalization started with RBI being nationalized. Then the Banking Regulation Act, which is presently the framework of Indian banking sector, came up by 1949. So this is something which you have to remember in the chronological order, in the sequencing or in which it has occurred. You have to remember this when we talk about the origin of banking in India. To continue with, this is the picture, which it's available in the internet. This is one of the primary major decision that has happened in the Indian banking sector in the year way back in 1969 was nationalization of 14 major commercial banks. Later, in 1980, 6 more banks were nationalized, and this picture is reflecting the meeting which was held at that time. Indira Gandhi was the Prime Minister, and during that meeting, this picture was taken during that meeting of nationalization of 14 major commercial banks. It was a strong measure that was adopted in the Indian banking sector, bringing 14 banks which were almost carrying out more than 80% of the banking business in India and directly under the government control. So government took over the control of the banking sector through this move, nationalization of 14 major commercial banks. So that was a very important move in the history of Indian banking sector. So that has happened in July 1969. The picture is this is the picture of the first meeting, And later in as I said earlier, in 1980, 6 more banks were nationalized. And this is the 14 major banks which were initially. Now again, when we talk about, we have only 12 banks by merging many of the small banks, but this is the list of initial 14 banks which were nationalized during 1969, the first significant move in the Indian banking sector. And you can just read the names: Allahabad Bank, now Indian Bank; Bank of Baroda, Bank of India; Bank of Maharashtra, Central Bank of India; Canara Bank, Dena Bank, Indian Bank, Indian Overseas Bank, Punjab Bank, National Bank, Syndicate Bank, UCO Bank, Union Bank of India, United Bank of India. Some of it does not exist now. Some of it has changed the name, which I've put in the brackets, right? And this is the paper cutting of that day when 6 more banks were nationalized. It was in the headlines. It was way back in 1980, and these were the 6 more banks which were involved in the nationalization. And if you look at the present condition, this is it. The present condition, we have 12 public sector banks. Okay. In the past year, 10 public sector banks were merged into 4 banks, which we know, right? Which were merged into 12 public sector banks, which directly come under the government control. Okay, so this is Punjab National Bank, Indian Bank, State Bank of India, which is the largest bank, Canara Bank, Union Bank of India, Indian Overseas Bank, UCO Bank, Bank of Maharashtra, Punjab and Sindh Bank, Bank of India, Central Bank of India, and Bank of Baroda. So this is the present condition of our Indian banking sector when we speak from the perspective of nationalization public sector banks. Now we are aiming at the centralization of power within the banking sector so that we can go with the better management. So that's what I would like to discuss in present day class. We were talking about the history, the developments in the Indian banking sector. And I would like to mention that when we look across the globe, if we look into the different industries, different types of industries operating within the country, our banking sector, our banking industry requires special mention because of the rules and regulations and because of the performance of the sector over the past few years. Our sector is well guarded with lot of policies and regulations and interventions, timely interventions made by government and Reserve Bank of India from time to time. So our banking sector is considered to be one of the strongest sector within the country and also across the globe. So we can be proud of our sector, which is well protected, which is well protected with stringent guidelines, rules, and regulations. Of course, there are changes coming. There are many changes still coming which are in the pipeline, which has to be passed in the parliament. That you will come to know in a short span of time. But for the time being, we can be proud that our banking sector is one of the role model even during the last economic crisis, financial crisis, because ours was one of the economy which was least affected because of the financial crisis. One prominent reason for that was a banking sector which is well protected by Act, rules, guidelines, and regulations. So with this, we stop here. So in our today's class, we were discussing about how the word bank came up, right? And who were the forerunners in the banking sector and what were the phases. We said there are 3 phases in the development of banks in India, in the development of banking sector in India, right? So these were some of the things which we are discussing in our today's class, right? So if you have any doubt related with this, you can ask me now, anything.